Good evening and welcome members and guests. This is Hanny Michael, President of the Virtual Investment Club of Sacramento. We are a better investing model club open to the public. All of our meetings and stock studies are virtual, allowing us to have members from the US and around the world, including Canada and China. Guests, as observers, you will be muted during the meeting and will have an opportunity for questions and comments once the meeting ends. Any companies that we present today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. This meeting may mention products or services not endorsed by BetterInvesting or our club, and the views expressed are those of our members and do not necessarily represent those of BetterInvesting. This meeting is being recorded and will be posted to our YouTube channel for future use. I'd like to start by just going through the agenda very quickly. I just read the disclaimer, and Roy will be doing the treasurer's report. We don't have an education topic this month, but we will have one next month. And we will have a stock study presented by Jay, John, and Matt. Next month will be Megumi, Mina, and Roy presenting a stock study. And then we have a number of PERT and annual reports, and those will be presented in this sequence. And then we'll have a discussion on possible buy and sell actions, and then we will conclude the meeting and open the mic for questions. Okay, so without further ado, I'd like to pass it on to Roy for the treasurer's report.
Okay.
And
all right. Do you see
yes,
the portfolio? Okay. We track our stocks two ways. One is with Morningstar's portfolio product, and the other one we're using My iClub. And I'll show you first the Morningstar. And I have this in order of initial purchase. And last month, we voted to buy more AQN and more Disney. We also sold Pets, and that Pets money went in as cash. We used approximately $1,000 to buy Disney and $1,000 for AQN. And in this month, since our last meeting, you can see we've actually lost money on AQN, but gained money on Disney. And reviewing this, you can see we started the club in May 2016, and BIIB was positive, but the last few months it's taken a downturn. We bought Five Below, I think, a couple of times, and that's been a big winner, and some of the others. We have Ozark, which I think we've bought 3 times, and that one hasn't turned out as well as we had hoped. Let me go back to my view here. Sorry, folks. But anyway, the way this tracks each purchase we've made, just so that we know how well we chose or made selections on that particular month. But I will go to now My iClub, and you can see the list is shorter. That is because all the purchases are combined together. There may be another view we can pull up, but anyway, this is how we've done. We also track it by company size, and you can see that almost 60% is mid-size. We have a one holding of only 2.6 in small, and 23, almost 24 in, actually 26 in large and mega. That's probably a little bit heavy in the mega size. Better Investing recommends 50% mid-size, 25% small, and 25% large. We try each month to find some small companies, but we've been fairly unsuccessful. But we will keep working at that and try to trim it down. And we may end up actually selling some large size stocks later. Any questions about the treasurer's report?
So now, Roy, where would I, so the Morningstar, to see it, I just go, how would I do that?
You've got to make sure you have the account information, which I can make sure you have that. But you pull it up and you click on my portfolio, and then it'll ask you to sign in, or you sign in and then you go to portfolio, which is here, and
Okay.
you'll see Virtual Investment Club of Sacramento pop up, and then you'll get this.
Okay. So thank you.
So if no other questions, I'll give it back to
And I guess the same
Hanny.
thing for my club. I just go to my club and there's some kind of a login or something.
Correct. You
Oh,
should already know how to do that because you've been voting.
okay. All right. Yes. Thank you.
Sorry, I was muted there. I said thank you very much, Roy. And so the next item on the agenda is the stock study. So I'll get, Jay, I guess you're presenting. I can't hear anyone.
I'm
Go
so
ahead,
sorry.
Jay.
My microphone is just flipping. I forgot to. I was talking to myself, I guess. So this month, the stock study committee, Matt, John, and me, we want to optimize our current bank stocks. So right now we have three stocks in financial services: Bank Ozark, PacWest, and Schwab. So, but the focus of this month, we want to look into Ozark PacWest because the reason is that Ozark, as you can see, that we lost about 40%. The table here is showing that we purchased Bank Ozark twice back in September 2017, and so we lost about 40%. PacWest we purchased in March 2019. At that time, the goal was to challenge Bank Ozark, but even though Bank Ozark had a very bad year, a bad quarter at that time, but management-wise, based on the matrix that we are running, which I will show you in next few slides, it wasn't too bad. So it ended up that we did not sell Bank Ozark, but we purchased PacWest add-on as another small, medium-sized bank. So we have about 5% bank stocks in our portfolio. Bank Ozark is small and PacWest is medium. We want to recap again. So we are going to make a decision at the end whether we want to sell one of the bank stocks or both. But Matt is going to recap of bank industry based on today, the current environment. How does bank make money, and give us some ideas how Federal Reserve rates going to affect the banks. So Matt. So
Okay.
I'm going to flip the slide and go ahead and talk.
Okay. So there's really just three things to go over for the overview. So what types of banks are there? How do they make money? And then how does the Federal Reserve and interest rates affect bank profits and sales? So the two types there are investment and commercial banks. So investment banks are the ones that, normal consumers like us are probably going to have no experience with whatsoever. So they are really just responsible for helping companies raise money to sell stocks and bonds. So when somebody does an IPO or something like that, one of these investment banks is going to kind of do all the work for them. So all the regulatory things and raising money and all those kinds of things. So their customers are typically corporations, pension funds, hedge funds, commercial banks, and governments. And then some typical examples are Goldman Sachs, JP Morgan Chase actually has an investment banking arm, and Morgan Stanley. The second type, and the ones that we're looking at now, are commercial banks, and these are just your typical run-of-the-mill bank. So they take in deposits from customers, and then they basically redistribute that money in the form of loans. But they do further subdivide into different types. So there's retail, which the ones that we, frequent all the time, or probably less and less, I guess. I don't think I've been into an actual bank branch in several years. I live in California, and my bank's in Ohio now, so if that makes any sense. But then there's also commercial banks, so they pretty much try to deal with businesses only. And then you have specialized ones like American Express is actually a bank, even though we know them mostly for their credit cards, which is how they specialize. And then like Quicken Loans is another. They just specialize in mortgages only. And then just some other examples there, like Bank of the Ozark, Pacific West, and then the commercial or retail banking side of JP Morgan. Any questions about those two?
Oops.
Oh, okay. So how do banks earn profits, commercial banks specifically? So investors, if you start in the top left there, investors deposit their money into the bank. So RS is rupees in this case. I think this is an Indian bank example. They take that 100 that you would have just deposited into your savings or checking account. 10 of it goes into their reserves. They just hold on to it in cash. And then 90 of it, roughly, they take and they're going to loan that money back out for home loans, car loans, personal loans, commercial loans, all those kinds of things. Then as the people who took the loan pay that back, the bank takes some of that money and keeps it as profit, and then some of that money they take, and then when investors want to pull their money back out, they give it back to the investors with interest. If it was an actual investor in this case, so, and not just somebody with a savings account. Okay. So then just another example here. So how banks earn money. So loans, so the interest rates that you pay on a mortgage or a car loan or something. Credit card interest if they offer credit cards. Product fees, so any transaction fees, you had a overdraft fee or something like that. That's another way they make money. And then they offer other products too, like insurance and financial planning and all those other kind of goodies you can get at a bank. If you go back one slide.
Oh,
Jay.
sorry.
So the things that cost banks money are the interest they pay on savings accounts. So that's their, expense line. And then the interest they pay on the money that they borrow. So banks also take out their own loans that they use to get cash to fund the loans that they give out. So those are their revenues and expenses, essentially, on those two lines. Go to the next one. So here's an actual example from a quarterly report of another bank we were looking at. So in the red box there at the top, you can see that's a listing of all the loans that this bank has made. You can see they have traditional commercial finance loans, commercial loans, mortgage loans. Then they have securities, Federal Reserve bank stock, all kinds of things in there. And those are their assets, so that they call them. Then in the blue box down below, you have the deposits. So these are just normal savings accounts, money market deposits, and CDs. So certificate of deposit, where you put your money in for 24 months and they pay you 2% or something like that. So then below that you have green, and that's the bonds and the debt that the bank has taken out, just like any normal corporation. So they go out to the market, to an investment bank, and they say, oh, we need, in this case, it looks like about $4 billion in cash, and then they get people to pay them the $4 billion, and then they pay them back as interest over time. So we go to the next one really quick. So in the orange here, kind of highlighted the vertical, it's a lot of lines, I know, is the percentages and the interest received on all those different line items. So if you see kind of in that first red box, they're looking at 3%, 4%, 5%, 6.19, and those are their assets. So they want to keep those rates pretty high. And then if you go down, so you see on their deposits, they're only paying, 0.8, 1.18, 1.6. And then it does get a little high on the subordinated notes, down to 5.5. And if you keep going all the way down to 3.54%, that is their net interest margin, and that is their profit, essentially. So of all the money that they've loaned out, when you subtract the loans that they've made from the money, the interest that they're paying out in deposits and bonds and things, they collect 3.54% on essentially all of the assets that they have in the bank. And that essentially is a listing of how this particular bank makes money and how much they make. Any questions about that?
I don't have a question, but I was listening to an expert the other day, and he was saying how banking is becoming, in many ways, less important than it used to be. Like you mentioned, Matt, by the way, I think you're doing a good report, but
Sure.
like you mentioned, the other people don't go in the bank. I remember I used to go, and I used to be a treasurer of a group, and I go in the bank every week. And then even later, I would go in the bank once a month. But heck, now with smartphones and other technologies, people banking, well, they don't use bank as much as they used to. That's what report I was
Yeah,
hearing.
definitely. Yeah, I mean, the branches are just shrinking by significantly, I guess, especially with online and all the things that you mentioned. But I think they still will exist because people, they need to get cash, and they usually need to get more than they have. So banks will exist in some form, but I don't know what that exactly is going to look like, 30, 40 years from now.
Yeah, especially they'll make loans to businesses, I guess, and other loans like you're mentioning. Yeah.
Right. Okay.
Was there a percentage on how banks make money? Like what percentage is fees versus loans? Just curious.
Yeah, I mean, it's different for every bank. It really depends on how they run their business, right? So in this case, I mean, you could break it all down, right? So if we look at the percentages on the interest here, just looking at the numbers. So roughly gross loans looks like it's about 260, I think those are millions. Interest earning assets, 313 million. Actually, this is only a listing of the loans, so not the fees. But incidentally, in this one I was looking, the fees are very low. I mean, it was like 10% or less. The overwhelming majority comes from the loans that they make.
Okay.
In this example. All right. So how do interest rates affect banks? So typically, higher rates equal higher earnings. And the higher nominal rate, so the federal funds rate, the one you hear about, they increase a quarter point or decrease a quarter point, give banks, so the higher they are, there's more spread, and that allows banks more play to adjust, their savings rates versus the loans that they're making. And basically, higher interest rates on cash that they have held also helps because they're just earning more by holding on to that cash, because it's typically invested in very low risk things. So they're typically buying, government bonds and things like that. So the higher the interest rate the government's paying, the more the bank's going to make. And then another quote is banks borrow on a short-term basis and lend on a long-term basis. So if you think about what that means, when they say they're borrowing, so they're borrowing from your savings account, right? And they may pay that back in a couple days, they may pay it back in a few weeks, but typically it's, you're always going to be able to get your money out. So they're borrowing on a short-term basis and they're paying very, very low interest rates. So the interest rate at my bank, I think, is 0.1% or something like that on my savings account. But when they take my money and they loan that back out, they're loaning it, for an auto loan at 6 or 7% over maybe a 5 or 6 year period. So as rates fluctuate, they go up and down. It really depends on the mixture the bank has of like how many long-term loans. So if they're very heavy in like 30-year mortgages and rates are going up really fast, the bank may have lower profits in the near term while they, because they can't adjust those 30-year mortgages. They're typically locked in, so there's nothing they can do until more people start to get mortgages at the current rates. But meanwhile, they have to keep increasing their savings rates because that's what all the other banks down the street are doing. So I may have been earning 0.1% today, but if interest rates go up, another 0.5%, I might be earning, 0.2% now. And they have to keep increasing that, but the mortgages that they have out there are going to stay at the rate that they're at because they're fixed rate loans. So it really depends on the mix. It's not to say it's always higher rates are always better. Over the long term, yes, but in the short term, they can fluctuate. And it really does depend on kind of the mixture of the loans. So okay. Any questions?
Yeah, well, a lot of time, what I understand from Bank of Ozark, that like about 80% of the loans they make have elevator clauses, in that as interest rates go up, the loan payments increase also. So sometimes the loans.
Yeah, and you could do that. Yeah, definitely like variable rate loans and things like that.
Yeah. Okay, thanks.
But okay, I guess the last one, I forgot to put this in here. So typically the banks, they're working with that spread, right? So they want a big spread between short-term and long-term. Well, if you look at the current interest rate environment, and this is from the Federal Reserve data, so this is the difference between a 10-year government bond and a 3-month government bond. So essentially very, very short-term and much longer term. And you can see all the way on the right-hand side here in the bottom right corner, it's negative. So the inverted yield curve that you've probably heard quite a bit about recently. So there's essentially no spread right now between very long-term loans and very short-term loans, at least as far as the government is concerned, which has hurt bank profits and why we're seeing bank stocks and prices perhaps a little bit lower than they have been in the recent past, because there's not a lot of room for banks to move around and kind of make a profit. So with that in mind, I think setting up John and Jay for their presentations on which bank stocks to buy.
Yeah.
Any other questions?
Yeah. Okay, no questions. So
okay.
Now let's dive into Bank Ozark and PacWest. So first of all, this on the left-hand side, those two graphs are from SSGs. Just want to give you a representation of how PacWest, the fundamentals, the graph, how do they look like? So as you can see, the PacWest was kind of flat the last 5 years, and the Bank Ozark was strong and consistently growing until 2018, 17, 18. The last year was starting going flat. On the right-hand side, I will not talk about in detail. Basically, is there was a checklist from Ross Meredith, and John and I, we worked just to see, what that each matrix, how did that give us, with the trend, are they historical trends that are going to go up, down, or flat? So we were just looking at, I just want to give you an idea of, different color. Like a green is a sale, blue is the earning per share, is a flat for PacWest, for Bank Ozark is down. So you will have a chance to see SSG later and stock selection guide. This was just gonna give you at the high level, mainly want you to focus on the graph, how they look like visually. So this is the checklist, the bank analyst analysis checklist from Ross Meredith. But I want you to focus on the red box. These three matrix mainly is talking about the management for each bank. So return on average asset. So this is on the SSG, and we want it to be 1.5% and or better, which consider is excellent in their management. ROAA, return on average asset, is the most effective way of quantitatively measuring the strength of the management. PacWest is 1.6 and the Ozark is about 2%. Another matrix we want to take a look is the loan loss provision ratio, which this information we could get actually from the value line. There's math, basically loan loss provision expense divided by total loans. We want to keep it less than 1%. So both PacWest and Ozark reach that goal. The last efficiency ratio is not in Ross Meredith's a checklist, but I learned this from bank. So we reach out to the instructor taught bank analysis at the Better Investing Convention this year. I was asking his opinion based on our checklist, our SSG. We were just asking his opinion. He gave us many matrix have us to look into. One of them is efficiency ratio, which we want to keep low, less than 45%, and the lower the ratio, the more efficient the operation is. So actually, again, these both banks were able to keep low, but Bank of Ozark is even lower, about 2% lower, 2% lower. The next one on the checklist is evaluation. I'm going to let John talk about the valuation.
Okay, thanks, Jay. So the price in the second line of row of data is correct as of Friday close of business. Those prices have risen a little bit for both banks. So we did not update the relative PE right above that. So I just want to give everyone the current PE. I tried to update the SSG and just take what is on there, update the data. So PacWest is 60.7%. Ozark is 52.6% now. So it says look for buying opportunities at or below the average PE. So obviously, even with those increases, they're still well below the average PE, which would be, essentially 1 or 100%. That's what I believe that would mean. So they're well below that. The book value, the easy way to think of that is it's the equity, but just take the assets minus the liabilities. Is a kind of conceptual way to imagine that. And that's just the raw figure there. Tangible book value we see below that is you take out from that calculation, you remove from assets the intangible assets like goodwill, which is basically what you get when you purchase another company for more than its hard assets, than its tangible assets. You get some goodwill in the process when you pay that much. And so you can see based on that trying to explain this in a way that I can understand it is that PacWest has more intangible book value as part of its book value than Ozark as a percentage. You know what I mean? As you can see, I guess that would mean $21 worth of intangible book value for PacWest, 39 minus 18, and then only roughly 6 or 5 for Ozark. So
is the price to book calculated on book value or tangible book value?
Price to book is book value, and then right below that is price to tangible book value. Right below that.
Sorry.
Price to tangible.
We calculate both.
Yeah, we put both in there. That's one thing is that as you can see that the ratio just shows you what I just explained is that Ozark has a lower ratio because they have they have in a lower would be better for a bank. I guess I should make that clear, because you want to have less intangible assets, as the little note says there. For banks to grow by acquisition, seek tangible prices lower than 1.75, because you don't want them to be acquiring too much and getting too much goodwill. It doesn't really do anything for you as far as a hard asset goes.
And those dollar signs should probably be eliminated on the Pac West ratios there.
Correct. Thank you.
Sorry. Yes, that was a mistake.
Yeah. Okay.
Okay.
Well, that's pretty much all I have today.
Yes. Okay. Thank you, John. So I also grabbed the SSG summary page. As you can see, they both actually at buy. 2 weeks ago when John and I looked at SSG, actually they both upside down ratio at 3-to-1. And I just want to do a comparison, if it's a buy, the return for Ozark is about 17%, for Pac West is about 14%. So it's just at the high level. I just want to give you some idea. We want to make a very strong recommendation, but bottom line is we are still a little bit indecisive whether we should sell one of the bank stocks or should we sell both of them, Bank Ozark and Pac West. Well, based on our matrix, actually Ozark is a bit strong, a bit better in terms of management than Pac West. So this is the presentation. Would you like to see my keyboard's not working. SSG, or do you have any questions?
Yeah, I have a question, Jay.
Okay.
First of all, it was a very good presentation. It was you guys did a lot of work, so kudos for that. I think to make a decision like this, it might be good to try to get an understanding of what their how they will perform going forward. So what are the projected sales, earnings? Are they operating in certain geographies, and what's the economy like in those geographies? Is there a lot of construction going on? I know that Ozark relies a lot on construction loans versus sort of retail banking. So trying to maybe answer some of those questions might help us to get a sense of where each one is going and what that might look like.
That, and also seems to me that most of the stuff you showed us would be why we would want to buy those stocks. Why do you want to sell one or both?
Right, that's the question we ask ourselves as well. So we lost 40% for Bank Ozark. We talk about among us, John, me, and Matt. We say, actually right now it's a good time to buy a discounted price.
Yes.
So in terms of practice, if it's in my own portfolio, I probably just continue to hold. Probably I will buy more. But within the club portfolio, if everybody contributed money and we lost 40%, how does, as a club as a whole, how do we feel? Like, would you consider continue hold on to it, or would you, just want to take a loss? What's the best practice?
That's where Hanny's question comes in, because just because we've lost money, I mean, if you kept selling stocks that you lose money that are going to go up, you're getting behind the 8 ball. If you see that these are going to continue to go down, then we would want to consider selling. But just to sell because we've taken a loss, the only reason I can see doing that would be for a tax, recoup the tax loss or harvest the tax loss.
Yeah,
we'd want to keep it and maybe even buy more.
So I had this exact situation today, actually. I own a company called CNQ, Canadian Natural Resources. They're an oil and gas company in Canada, in Western Canada. And the stock took a beating over the last few months, and it was down about 20% or something like that. I own quite a bit of it because it pays a very high dividend, and very well run company, but just because of the election that we have in Canada and so on, oil and gas companies and pipelines and so on have been really hurting. After this attack on the Saudi oil fields, the thing shot up, and I'm now in the black. So, but going forward, that company, I know that they have a lot of reserves. They run a very efficient operation, and I own it because it's generating a fairly high dividend. And that was kind of the basis of my question: is what I think, Bernard, if you wouldn't mind going on mute, but if where do we see these two banks going? Are they? What's the future look like? Where are they going to get growth? I don't know if we can answer that question right now, but that would be something that we might want to look at. Because I find a lot of times with the SSG, it's kind of mechanical, and you run through these numbers, but you need to know the story behind it.
Yeah, I agree.
So
that was my question.
I
have a question about why did it go down 40%? Do we understand that?
Yeah, we reported that they had one time was down was because one of the executive resigned. Was the operation? I forgot his title.
Yeah, no, you're right. The first time it went down, the guy in charge of the construction construction group, that the construction loans, and that was the most profitable part of the business, and he resigned for some reason, and they didn't give an explanation of why he left suddenly, and that, I think, caused a lot of angst in the market, and the stock took a hit, and then it kind of went down from there.
Well, and several of those construction loans went belly up, and that's probably why he exited just before that news got out. Because as I recall, they had to write off several loans.
Now, I just pulled up
those two events is what cut into their margin. And, I remember voicing at the time, maybe that was the time we should sell because of those bad loans. But we didn't, and if that seems to be in the past, will it? Then can we expect it to grow? And that's where like I said, Hanny's question comes in and is really important and relevant.
I just pulled up a stock chart, 2-year chart on both, and they both look really similar. They were back in 18. They were fairly high, and then they both have tailed off. I'm just wondering if there's a case like to tag along with Hanny here, like what can we expect in the future? Is this are these is this these regional banks something a place where we want to invest money? I don't own any myself, and they're not looking real compelling here. I'd rather be going with something like J.P. Morgan or Bank of America or something.
That was Matt's suggestion. We briefly looked at a couple of large banks. Was that J.P. Morgan? Matt, I forgot. It did not look good. All these large companies, like their sales were flat, earnings were negative. We looked at a couple of them. J.P. Morgan and Chase. I forgot what's the name. Yeah.
Super slow growth. I mean, they're basically government bonds, right?
I would think that with the PE of 7 or 8 and a yield of 3.5% and no negative prospect, I think Bank of Ozark should be okay. And I think we just sell the other one. Damn, somebody. Just sell, if we're going to sell keep the best one and found Bank Ozark was better, and it's rated as a value stock with a PE, like I say, of 7 or 8, and a yield of 3.5%. And I don't know, I think it'd be a hold, Bank of Ozarks, but maybe you don't want to hold 2 banks. That's what I would think. Sell the other one and keep the best.
Is there any way to tell like what they've loaned their money to? Do you guys know? Like, so would there be any way to say, oh, I think it was like a mall or something that defaulted
Yes.
for Ozark,
There was,
right? Can we find out, like, are they all, it was like all the loans they gave out to malls or something? You know what I mean? Like, that part I don't have any knowledge of.
I've listened to the earnings calls, and they loaned a lot of things like boats and campers and businesses, and it seemed like a diversified loan portfolio. That was my impression.
It might be in the 10K or the 10Q.
Mm-hmm.
Yeah.
Yeah, back then when I first found this company, they won rewards every year. They did a lot of acquisitions, and they have 4-time stock split. And yeah, I don't know, John, did you do a annual report on Bank Ozark a couple months ago, or no? I lost the track.
I'm not sure if it's an annual report, but I can check. I'm checking right now.
But probably annual report you probably did not mention. Oh, your quarterly report didn't mention anything about their future growth for the next year or something. I remember they found an operation guy from some other companies. Let me just quickly. Reports. It was 2009.
And I have a question about the impact of lower interest rates.
Uh-huh.
I mean, it sounds like lower interest rates affect their earnings, right? As Matt explained in his presentation.
Yep.
Okay, so I've been hearing that they want to lower interest rates, or Trump wants to lower interest rates.
Yeah.
Have you heard
they
that?
are lowering them. Yeah, I mean, the macro environment's really bad for banks right now.
So I don't know
but
if this is the right time to buy.
Yeah, in the near term, it actually might give them a little bit of leeway,
Mm-hmm.
because as the rates are dropping, going back to that kind of mortgage example, the 30-year mortgage that somebody took out a year ago at, I don't know what they were at, 5% maybe, is going, even though they've cut the rates, those people are still paying their 5% on their mortgage.
Okay.
Because, maybe at 4%, it's not enough for me to refinance it. I don't know, or what have you. But they're probably dropping the other rates, like the savings rates and things like that. So they may actually make a little bit more in the near term. But yeah, long term, I don't know, to your point. It's not good, I think, is the moral of the story.
Lowering interest rates isn't good, no, for banks. That lowers what they can charge for their loans, which is, I mean, that's just their...
Yeah, I think low for long term is bad for banks, definitely.
Matt and others who know, it seems to me, though, even though they can charge less, because interest rates are down, their borrowing costs also go down, don't they?
Yeah.
Mm-hmm. Yeah.
So it should be a wash, it seems to me, but I don't know the industry well enough to state that.
Yeah, I mean, it's like, I think when it gets this low, though, like there's only so far it can go down. You know what I mean?
Yeah.
And then you start to go like, okay, well, if the savings rates only drop 0.1%, but the loans I can give out drop 1%, that hurts my earnings, kind of like long term.
But interest rates eventually will go up again, probably.
Yeah. I thought that too last year.
So yeah, I don't have. Sorry, we should look into further. Henny, you guys asked a great question about that.
Yeah.
I don't know what's the plan for their future. Expanding how they working on their organic growth or anything. I just want to see. There was some information about. Do you Bank Ozark, Zach was saying Bank Ozark is well poised for organic growth on the bank of continued improvement in loans and the deposit balances.
Okay, I'm just paging through the annual report here, and I found a page that shows their loan portfolio as far as residential, agricultural, commercial, and industrial. It isn't like in percentages. I don't know if you want to give me the screen. I can show it.
Okay. Tom. Okay.
We're at 30 minutes for the stock study too. Just time check.
Okay. Thank you.
Thanks.
Okay, can you guys see that?
No. Oh yes.
Yep.
Yeah, not the percentage.
So it looks like construction and land development is the biggest. It doesn't say this page isn't showing regions, but it's.
I was just reading something, Tom, and it was saying that they're the largest construction or the premier construction loan bank in the United States. They've done a lot of high profile buildings in Manhattan and in Los Angeles. So it looks like they're working coast to coast in terms of construction and development.
Yeah, now that you mention it, I actually saw they redid a hotel near LAX.
Yeah, but I think the commercial stuff and the residential is probably geographically focused.
I think not very long ago they opened the branch in West Coast in LA.
Yeah,
maybe a year or 2
I think
years
somebody
ago.
mentioned that on the last review, but
Well, we can see the chart, but I don't know how helpful it is.
well, it looks like 13 billion in real estate, and about half of that, 6.5, is in construction.
And the total loans is 17 billion.
And the 17, so yeah, they're heavy into real estate and then construction. So consumer is only like 2. And then I do recall that they said they're very careful about how they select their construction loans. During the financial crisis, they were actually buying up other banks that went bankrupt, and they were doing quite well. So it sounds like they're very conservative. But I don't understand why the stock took such a hit.
There was another quarter that there was something to do with property. I forgot what I just showed. In South Carolina and somewhere else, I forgot. I was just reading. They had a bad loans, and so they were talking. It was just they have a couple two quarters have a bad news. One's resigned, one's had a bad loans in 2 different places. That also, yeah, took the price took a hit. But I followed Bank Ozark before, so now I'm following PacWest. I was telling Matt and John that based on just what I'm hearing at the earnings call, I really like a Bank Ozark. They have a specific sessions just to talk about management, answer questions. And for PacWest, I couldn't even get a recorded earnings call. I can only read a transcript. I do felt that when I listened Bank Ozark CEO were talking, I do felt that he's very sincere and he really care about his people and I care about, I forgot how he even mentioned in one of the earnings calls matters of these loan officers, they sounds like they treat the employees very well. My impression was personally, I do favor Bank of Ozark. Just unfortunately, it's even myself, I had some just lost money at this point.
So is this typical of what's going on with the rest of the banks, did you say? The numbers?
I think a
Is
lot
it
of banks.
industry-wide?
Oh, you mean because the environment, because the interest rate? That
Yeah,
could
just
be
the performance.
performance-wise. Look, the Pac West was also losing, but the Bank of Ozark, the hit was bigger was because they had a bad news come out. One's bad loan, other one was the resign officer. Made it worse basically. They
But I'm
found
saying like
new
trend-wise, I don't know if that makes sense. I mean, are all banks doing not great?
Yes, the whole sector has been very not well performing.
Well, I think that's saying something, probably.
Well, J.P. Morgan and Bank of America, they're look like they're at near 52-week highs.
Oh,
I think that's
They're
more to do with like the safety than anything, right?
they're in a different category. I mean, they haven't really gained much over the last. The highs are kind of flat here. But are you guys still looking at my screen?
Yes.
mhm.
Yes. Yeah.
So there's the J.P. Morgan chart. That's a 2-year chart on J.P. Morgan, and that's and then you look at something like Ozark.
Pretty flat to me, Haney, for the last 2 years.
That's Ozark,
Yikes.
and Pac West looks about the same, and Bank of America looks a lot more like J.P. Morgan.
Is it scaled the same? The numbers?
This
Okay,
is
all right.
2 years.
Okay.
I mean, I don't know about percentages or whatever, but I mean it's
Can
both.
you show us Bank of America? Thanks.
That's another flat one, really.
Well, it's better than down.
Yeah.
But I agree, it's hasn't made it's flat. You're right. It's range bound.
I found a
So
comment.
is Bank of Ozark a value trap?
I think it's a value.
No, well, if the price has gone down 40%, and so how much does it have to go up to get back to even? And then, during that time period, what could we have invested in, that would have given us a higher return? So it's, when it's gone down that much, and then you have to recover from that, but you're also missing out on some other opportunities.
And it almost needs to double to get back to December of 18.
Yeah.
But I think
What's the catalyst for doing that?
I think
that was the basis for my question, really, right?
So I'm looking at my 2018 Q3 report. There's a comment based on management comments. They are going to have growth in 2019. They expect the 2019 growth to be better than 2018 growth.
I remember I used to listen to their earnings calls, and he would talk about would make more acquisitions when their PE was low made it easier to make acquisitions. But anyhow, I think it's a, I don't, it could be a value trap, but you got a good point, Annie. It's opportunity cost. But I think the price is so low and the dividend at 3.5%, I think it's a hold.
Dividend yield does go up when the price goes down, I believe. So, but it's still coming in. It's true.
It seems to me that the crux really is what Hanny said. What's the future look like? I don't think we can say, oh, it's down 40%. We need to double it to get back. We look at it today, and will it rise going forward? If you think it will rise going forward, then we should keep it. Don't worry about really what it was when we bought it versus now. It's what's going to be now versus a year from now,
Right.
2 years
I
from
think
now.
in the stock selection guide, didn't Jay get a 17 as an expected long-term return?
Yeah, but sometimes if you're not careful, you end up with a value trap like Hanny suggested. So you got to be very careful.
So do we have enough information to make a decision now? Or, it seems to me like we're kind of stuck here.
Yeah, I recommend we just, how about we just sell Pac West to keep Ozark?
Amen. Hallelujah. Yes. Second the motion.
We don't have to make a motion. So I'm just
Well,
making a
we're not there
recommendation. We
yet,
can motion
so
later. Yeah.
can we hold that and go
Yes.
to the reports?
Yes.
We're 10 minutes behind.
Yes.
All right. Mina, is he there?
Okay, we'll make Mina presenter.
I'm not sure. Is he there though?
He is
Is
there.
Mina? Yeah, I don't hear him.
Oh yeah. Maybe he's like me. Have to flip the.
Is he muted?
No,
Oh, he's not.
doesn't show, but I don't hear him.
There he goes.
That's Mina.
Mina, we can't hear you though.
We forgot to test his mic. Maybe we go to the next person and go back to Mina.
Yeah, Roy's next.
Roy's next. Okay.
All
Roy, I'll
right.
make you presenter.
Okay. Let's see here. Okay, first I just want to show a couple of value lines. This is the aerospace defense industry, and it talks about it getting a bad few weeks. August was not great, but when they talk about aerospace, they talk about the bright spot being HEICO. So that was nice. The date on this was September 6th, and it had gone up a tremendous amount. But I will talk about something later. Here's the value line on HEICO. They give it, great ratings, and they rate it or rank it as timeliness of 1, which for them is, it's going to go. But as you can see here, the price really exceeds the value line. And that is demonstrated. Let me see here. In the PERT report, can everybody see that, or do I need to make it larger?
No,
That's
it's good. It's good.
Okay. I kept the same sales and earnings projections at 14 and 19% respectively. Year-over-year sales was 14%, and that's a typo. That's pre-tax profit. Sorry about that. That rose at 18, and earnings rose at 20%. And going the trailing 4 quarters, sales at 15.6, pre-tax profit at 22, and earnings at 25.6. But now you can see it's basically overbought. The current PE is 55, where the average is 32. So it's sitting at 173% relative PE. And I can show you the SSG, but the using, I thought, good numbers, not aggressive, but not too conservative either. It's a 0.7 to 1. But it's a little bit better than it was last quarter. Compound annual return is only 3.3%, but still higher than last quarter. During the conference call, they were asked about the effect that grounding the MAX had on them, because what they do, they refurbish airplanes for a host of airlines. They do work also for the government, but on the airlines, they do that. They have a lot of communication stuff that they add to airplanes that certain airlines want. And the reason why the MAX hasn't affected them very much is because some airlines would have retired airplanes and bought the MAX. They're holding on to them. And because they're holding on to some, they need updating. So that has helped increase the sales and thus earnings of HEICO. And I noticed that American Airlines retired all of their MD-80s. Other airlines are still using them. So they say it's had little impact. So I don't know if they didn't do work for American Airlines, or there's just so many MD-80s in the world that they claim anyway that it hasn't had much of an impact. Something that we've learned over the period of time we've owned HEICO, they acquire companies, and last quarter they hired two. One was Research Electronics International, and it creates countermeasures for devices for espionage and information theft, and they put themselves out beyond airplanes to just companies. If you want, even in your hotel room, if you're in another country and you want to make sure that they're not have a microphone and spying on you, use the product that they now own. They're doing that. There's a French company, Bernier, and then just about a week ago, so it's outside of this quarter report, but I wanted to bring it to your attention. They purchased with cash TTT Cube, which is radio frequency sources for a host of aerospace and defense applications. So that's been generally good. It is highly priced at this point. They still make money, good earnings. I recommend a hold. In the correspondence between Hanny and I this morning, he was wondering, because of that and only the 3.3% compound annual return, should we sell part of it? And it's the $1,000 we put in is now worth $3,000. So if people wanted to get our money back, selling $1,000 worth would do that, and we would still have $2,000 worth of stock to continue to see how it grows. What happened, though, and did I put it in this? I thought I put it in this report, but I don't see it. Let me pull up a graph. So as you can see, it was going great until September 5th. And then it went back down to what it was 3 months ago. And I looked, oh, it was in the email. I put it in. I've looked at every source I could find. I used whatever resources TD Ameritrade had and Charles Schwab had. I could find no reason for this going down other than they had purchased TTT Cube, which I would have thought would be positive. So, but you can see it's now bounced up a little bit. You know, whatever it is that caused them to.
Unless they overpaid for that company, Roy.
Well, that's possible. They could have overpaid, or just the fact that the high numbers, everybody realized, oh, this thing is really expensive, and that's what caused it to sell off. But you know, like I said, we still made a profit. We could, if you wanted to recoup, you know, some of our money, we could sell $1,000 worth and keep the other 2,000. Yeah, and we're going to ask.
Yeah,
something.
could you bring up the value line just for a second?
Yeah.
So on the
make it a little larger.
That's okay. On in the top left there, where it has the total annual return projections for so the low they're projecting is -3%, and the high is 7.
Right, and mine was like 3.3, so my SSG can't cut it in the middle, I guess.
In the middle. So I guess, I mean, we'd look at the, you know, we would look at our portfolio. I don't have access to manifest investing anymore, but they had you know, the projected annual return, and you know, if you look at our portfolio and compare it, look at what each company is projecting to do in the next 5 years. You know, our goal is to keep our portfolio so many, 5% above the S&P or something in that range. So, you know, would this one help us do that?
Oh, come on.
Well, a manifest is showing 8.4%. Far.
So yeah,
Which is below
that's higher than my
sweet spot.
3. You know, quality is way up there.
Yeah.
Their sales forecast is a little lower than mine, but I went with what they've been doing every year. So anyway, we have, and I have it. Let me get my other. One thing I failed to show.
What about the quarter?
Is that it? No, that's not it. What I need is. There we go. Whoop. We have $5,000 in cash. So we don't need the money, but so basically $6,000 in cash. So I guess my recommendation is to hold until we can burn off some of that cash. But if you wanted to recoup, we could sell 1,000. I would be opposed to selling the whole thing outright. And as I said in my email to Hanny, because I wasn't even considering selling, I didn't have a backup. And that was one of the things we said we would do, is if we recommended a sell, we would try to also recommend a buy to replace it. So anyway, that's the report on HEI.
Roy, do you have the SSG?
Yeah.
The live one. I just wanted to look at the quarterly numbers.
The quarterly numbers were
The quarterly,
14.3 and
no, in the
20.4.
quarter.
Oh,
Sorry, the quarterly graph.
you can see the profit margin has been going up. And then if you want to see the chart,
Well, just the chart for the earnings. If you could show just click the earnings there.
so it's basically
Yeah. So they, from 10/18 on, it's been kind of dropping a bit, but
well, I mean, yeah, there were some high quarters. And
yeah,
that
if you
was
take
probably,
out,
let's see, get this earnings. That probably, because that was, January, it was in December 2017 that the tax
right,
that came in. So that's why that was so high, and that skewed things up.
Well,
But it's
if you
still in the 20.
yeah, if you look at the pattern, though, it's going up. If you take that out,
if you look on the right hand
50 out,
side here, it's 25-30% trailing 4 quarters.
Yeah. Okay.
Yeah. Anything else?
Why do you have two different ticker symbols?
I forget when it was. They issued another class of stock, and HEI has voting rights. HEI the Class A stock does not have voting rights, but we bought the voting rights.
Oh, okay. Thanks.
But
With our
I
hedge position.
listed that just for full disclosure.
Well, to me, it looks very high quality company, and I think Roy is right to just hold it. That's my feeling.
So anyway,
All right.
shall we move on to the next person?
Yeah. Is Mina there now?
Yes, I'm still here. Can you hear me?
Yes.
Now we
Yeah.
can, yeah.
Okay,
Yep.
I'm sending it to you.
I'm making him presenter.
Thank you.
Uh-huh.
Right, that should be up and running then.
Yep.
Okay, great. Thanks. Thanks for bearing with me with that. So we're National Beverage Corp. This is the earnings coming declared in September from the quarter starting July. The company met expectations for earnings this quarter after a precipitous decline in the last. Earnings were at about 0.74 a share. At this point, earning and the revenue is about 294 million. The outlook for future growth seems to decrease a little bit with mixed reviews. It from what I'm reading, it appears that next year is going to be a decline for the corporate. They're expecting revenues and sales lower than previously expected and what we experienced in 2018. A lot of that is due to ongoing litigation and the rise in competition. This quarter, there was also a loss of further loss of market share in the sparkling water industry. And that's just due to competitors really catching up to them in the sense of investing money and creating new lines of products. So in terms of forecasts, I've lowered the sales projections from 7 to 4.5, and the reason I've done that is it looks like the long-term, well, I mean, analysts are optimistic about the long-term outcome of the company in terms of a 5-year window or 6-year window, but the next 2 years seem to show steady decline. So we'll have to be ready to take a hit. So I've just tried to even it out in that sense to give us a more conservative outlook on what we to expect from this company. And in terms of the EPS, I've also adjusted accordingly based on member sentiment, and it seems that a lot of the analysts are around the 6 to 7% range for in terms of their projections. Now, this was interesting because when I did the SSG for Fizz, they have a very high PE ratio, and I mean the average high PE ratio is about 40. So it leads to really high prices for the company, even though it seems unrealistic to me. When I put in a higher sales percentage, about 7%, it projected high price at about $160, and right now it's trading at 41. So I just felt that was maybe a little bit too optimistic, and I think that's just we're skewed by the historical earnings of this company. So I do get a ratio of an upside down ratio of 5.5 to 1, pardon me, when I use those sales projections and EPS growth, and so that would suggest a buy, but I was reading about the ongoing litigation that are involved, and now it appears that there's also a shareholders dispute with directors' actions and potentially an oppression remedy claim, and there's also some claims of misconduct, but I mean I couldn't read more than misconduct. So I don't like the look of an internal struggle in the company between shareholders and director and management. So I don't like the sound of that. Plus litigation about the La Croix brand, as we discussed when purchasing the company, about whether it's all natural ingredients. What does that exactly mean? So between internal and external strife, I'm not optimistic about the company in the next year or two. And I mean, it has lost about 43% of its value since the beginning of 2019. Now I know this is kind of where I struggled with the recommendation, is that we could buy more and hope that the company does bounce back given its reputation, and there is some optimism in a longer term window, and if we're using kind of the BI 5-year benchmark, then it could be an opportunity for growth. But like Hanny was discussing earlier, there is the value sink that this could be, in the sense that we've already lost a significant amount on this one, and are we optimistic that it's going to grow fast enough to recoup the money in a way that makes sense to keep it? So that's where I ended up. So I did make a recommendation of a sale. I do that based on the fact that competitors seem to really be catching up, and they are posting larger profit margins than Fizz at the moment, and they are starting to erode its market share. So those don't strike me as positive signs for the future, and I think might as well ditch it now and invest in something that we're more confident, or something that's going to be more sustainable. I mean, even if this company does bounce back, it is a bigger player like Pepsi or Coke, when they really invest the funds and create those different brands, is that going to overtake this company? I mean, or at least limit the way it's going to grow. So also, one fact I thought was interesting, and I don't know how much stock to put by it, so I'll leave it up to your collective wisdom, but CNN Money said that found a 12-month median stock price forecast of $32. So, I mean, if the median price is going to be $8 less than the current price, are we really benefiting from the investment? So that's why I recommend a sale. And my apologies, I don't have a recommend buy to replace it right now. I know in the consumer defensive sector, reading about Zach's reports on the soft drink industry are just generally not favorable. So in terms of if we're looking for a replacement in the same industry, I don't even know if it's the best use of our funds. But if we do want to go that way, I'm happy to do a little bit more research to give a recommendation. So
I have two comments. One, if substitute, we could buy beer. That would always be healthy.
There you go.
But about 2 weeks ago, I heard on CNBC that Coca-Cola was coming out with a beverage like this.
Yeah.
It had a very strange name, and the analysts on CNBC thought that, you know, Coke would be wise to change the name. But they were, I think, trying to be hip. It's like, you know, what is it? Or, you know, some stupid name like that. But anyway, there it is. I think, you know, Coke realized this had been a great market and they could take a chunk of it. And if they do, that could probably hurt Fizz.
Yeah, and I don't find that there's very much kind of brand loyalty in the industry either. I mean, I know a lot of, you know, millennials that do drink their sparkling water, and they'll stock 5 or 6 different brands. So I mean, exactly, if there's more, the more that there is on the market, it's just going to dilute our ability, I think, at least, to really profit.
So even though we've lost some money, this is one where I'm thinking that the future doesn't look very good for us. I do have a question. I sent out a picture on an email. Did anybody else get their free 2 cans? Or am
What's
I the
free
only one that
toucan?
bought Fizz?
No, I got their annual report. What does free toucan mean?
Well,
I
it
just
came in
not
a
sure.
box and there were 2 free cans of their soda.
Oh, I didn't get the physical. I got the electronic.
See?
Uh,
Well, maybe
You gotta
just
walk
the
into
big
those banks.
shareholders got that.
I'm sorry?
I said maybe just the big shareholders got that.
Could be.
Jay, did you get 2 electronic cans of Fizz?
No. I only got. They asked me to vote. You know, inside the voting proxy has the annual report.
They sent her a JPEG. So.
Yeah, send me JPEG. Yeah.
They know I'm old school, you know, so I have to place my X on the ballot and send it in.
So I want to remind ourselves that when this company we purchased, the same as the pet, we really did not look the competitor at the time. So after I bought this company and I realized, oh my gosh, there are so many sparkling water, it's just like saying very competitive. It was one's bubbly, which is from not Coca-Cola, the other one, Pepsi. Yeah.
Yeah. Well, I did a little bit, and I think Matt did too. We looked at some others. This looked like the best company. The numbers were better. I do not like Bobley. I've tried that, and it's horrible, for my palate anyway.
Mm.
But anyway.
So one thing I noticed right away is how the pre-tax profit and the earnings have gone down the last 2 years very, very markedly. You can see it right away in the graph.
Yeah. Yeah, it seems a lot of the numbers just ride the highs that it had in 2016 and 17 with those rapid growths, and I think it skews the 5-year numbers too to really make the company look a lot healthier in that sense.
Yeah, even the sales are down this last quarter.
Yeah, and part of why we didn't do maybe as in-depth of research as Jay suggests we should have, and I agree with her. We were trying to look for small size companies, and of the ones that we found, these 2 were the best. We were, I guess, kind of blindsided that the competition really hurt pets, and it looks like it's going to be hurting Fizz.
I mean, the other option too is in the last few days, it's really the price has surged again a little bit. I mean, relatively.
Yeah.
Is it also not maybe a hold opportunity for 2 quarters and then maybe start to recoup? But I mean, I just don't. I have a hard time justifying a sale when we've lost. We haven't held it that long, but I mean, the future does look bleak. So I don't know. Your wisdom is probably a lot. You guys would figure it out better, so that's why I'm leaving it to you. But
well, I'll just say the same thing I said before. I think, like, if we want to improve our stock picking skills, the one thing I don't like about the SSG is that you can go through a mechanical sort of calculation and come up with a buy or sell decision, but really what's driving that in real life is the you know, is what's happening on the customer side, on the sales side, on the you know, the efficiency and so on. So without having a compelling sort of story, you can still get a, you know, numbers to kind of look good, but I think you gotta, what's driving the business, that's the key thing. So I think in all the cases going forward, we should really be looking at what is driving that business. How is it going to make money?
I agree, and that's what you're
Yeah.
supposed to do before you even start the SSG. And they say that the SSG is only 80% of the work. You know, it's not the total. So you're right. Those are the things we need to look at.
That's sort of like Peter Lynch talking, that you look at the product and see how popular it is.
Yeah, and I mean that's exactly why the SSG here actually it does recommend the buy, but I do think the sell is probably based on the narrative and the actual product. I mean that's probably a prime example.
So the lawsuit's still going on, but the natural flavor?
From what I can tell, it looks like, I mean, I don't, unless there's some sort of settlement that maybe they're brokering, but I haven't seen any real news about it lately. And the new news I've seen is on this shareholders dispute now. And so that's the other concerning part there is, are the shareholders, is there a bit of loss of confidence in management? What exactly, I mean, I don't know, maybe now if there's, you know, we actually have shareholders on the line, if there's some, I couldn't find specifics in terms of what the complaints were.
The complaint is, oh, the stock has gone down, so you must have lied to us, management. And you've got shyster law firms going out and filing these lawsuits. Almost every company has faced that from time to time.
Well, I know, but I mean, I actually, this is part of the litigation that I practice, is oppression remedy and claims, and generally there's well, I mean, at least in the Canadian side of things, there's relatively high threshold to make that kind of allegation against directly. I don't know if it is the same way down.
Unfortunately, not in the United States.
Unfortunately, not. It doesn't hold the same weight. Yeah. So when I read that, I mean, it sounded a lot of alarm bells for me, because given the different, I mean, the law here it is in Canada, but if it is a little bit of a lower threshold in the States, then maybe that isn't something to worry about. But
and maybe I'm too hard on my brethren, but these firms that file those, they're legitimate maybe 10% of the time at the most.
Yeah.
What they see is, oh, we can get fees if we get enough shareholders to join us in class action.
Okay. Yeah, I think we should move on.
Yep.
Yeah. So Tom, we only have about 15 minutes. Do you want to do BIB or LRCA?
I can do well. I can probably do them pretty fast, you know. But so give it to me.
Call you out if it's 7:45 then.
Give it to me here. Well, you guys took up all the time with all these extended discussions.
Sorry.
But okay.
We apologize, Tom. Go for it.
Yeah.
Okay. Which one should I do first here?
Well, let's see. I change the presenter.
Tom, did I change that?
Oh yeah. Sorry.
Okay. Well, here's, you know, it's like, this is what I have up on the screen. This is a 2-year stock chart of Ulta, and they've you know, recently had a real drop in share price. And I own Ulta. I'm still a little bit ahead on it, but not very much. And they've been a very successful company. And Ken and Mark Robertsons did a presentation on this, and Anne Cunez did a whatchamacallit, a first cut on it too. She was more optimistic than me. But let's see here. So here's the stock selection guide that I made for Ulta. It's I just went with the 2-year, you know, the recommend what BI said here, and this I was a little bit, like I said, I was more optimistic than Ann, but anyway, if we can, you can she cut her, she did 9 and 9. I guess I could, well, anyway, that would take time to do that. But anyway, this could be an optimistic stock selection guide. So it comes out looking, using what I considered reasonable at the time. It comes out to be a pretty attractive stock. I chose 30 for the high PE, 16 for the low. But those could be cut back. Now, one concern is here the quarterly data. Earnings seem to be slowing down. This has been a high growth company, but earnings seem to be slowing down over the last few quarters here. So here's sales and earnings. And let's see if I can find my, wait a minute, that's the wrong one. My first cut, they, I don't know, they have over 1,000 stores. I went to the one in Woodland and it looked decent. It wasn't as nice as Macy's, but they had a lot of inventory. They weren't very busy on Wednesday afternoon. But historically, the sales and earnings have been have been really high, but they are trailing. They have a lot of rewards club members that they use that data for promotions. What they were saying was the conference call that the makeup category is shrinking currently because there's less innovation, less new products coming on the market. That's why they think the sales are trailing down, but they're doing hair care, fragrance, personal care, and skin care is doing well. And they're going to launch a new Kim Kardashian West line, which I guess she's trying to keep up with Kylie or whatever her name is. And so anyway, I thought this was, due to the, since they're still growing, but they're growing more slowly. And they missed expectations. I thought that was why the share price fell so dramatically. So I was thinking that it might be an attractive alternative, but like the stock that I was comparing it to was Biogen, and it's in a totally different industry. But I've been trying to unload Biogen here for a few months now, and I've, I think this is reasonable prospects for Biogen. If I projected just, slower growth, and this is about what analysts and, both the analysts on this SSG Plus and also Value Line, they're projecting earnings about in this range of 5 years out. The stock price fell dramatically when they pulled that aducanumab off the market. They have another Alzheimer's drug that they just stopped the trials on that. The share price went up slightly on that. I guess they think the expenses will go down. They have another one, BAN 2401, still in trials, but that has the same mechanism as aducanumab. And everyone has failed with that mechanism, trying to decrease the amyloid. So, they haven't found the key to Alzheimer's. So, these are totally different industries. It's just kind of a wild idea. But I was thinking that, and of course I'm biased. I own Ulta. I don't own Biogen at this point. And I think, going forward over the next couple years, I'd rather have my money in Ulta than in Biogen.
Does anybody actually shop at Ulta on this in their club?
I don't, but my other club, it's all women except for me. 3 or 4 of them do, and they just rave about it. So
What's
our
the
club
draw?
owns it.
Like, I don't get it.
The selfies. People want to make themselves look good. So when they take a selfie.
Well, they,
I mean, I understand makeup, Bernard. I just mean Ulta specifically.
well,
Like, why them versus Sephora or Macy's or
Oh,
any of these other ones?
Matt, I don't shop at what's it called, Ulta, but the people that I know that shop there go there because of they kind of have a rewards program, so they can get their mascara. I mean, so that's how I think how they get regular people to go.
they have
I mean,
a lot of samples out where you can sort of try out the products.
Yeah, the time I shopped there is I was making, I'm not a shopper, and this Ulta is like 10 minutes away, and I was making little gift baskets, and you could get like everything in one store. They have a big range of products, different kinds of products.
Yeah, huge
So,
inventory.
yeah.
During Christmas time is crazy. I know my colleagues that they all shop for their wives. The line was super long. That's what I remembered. I very rare.
Is it
shop
better than
there.
like a Sephora or something, or cheaper, or anything like
Sephora
that?
is just one
I
brand,
don't
right?
know.
I
no,
don't
Is
think
it?
they're
I don't.
cheap.
Sephora has different brands. I think Sephora is a little bit more high end
Yeah,
than
yeah.
Ulta. Ulta's, I think, a little more affordable.
I think Ulta has a bigger range. It has this lower and, but I don't know.
Yeah, I think that's right. They have what they call prestige brands and like more commercial brands. I think they have like a wide selection.
I don't think we have them in Canada, but are they like a body shop? Is it like the Body Shop? Or is that something different? You guys
Beauty
have
shop.
No,
No, Body Shop.
the Body Shop. No, Body
Body
Shop
shop.
has more of its own product line, right?
And it's more for lotions and stuff like that. This has got a
Makeup.
lot of makeup and hair care. They have a little beauty salon in the back.
Mm-hmm.
And my
Things
wife
Canadian
tells me
women
that I
would
should
never use,
use.
right?
The women in my
My,
club, like the products, they like the prices, and they like to be pampered. And they pamper as well as Macy's. My daughter used to go to Macy's for but they have a clientele that seems to stick with them. Now maybe it's because of that rewards program. I don't know, but the four women in my other club that shop there just love it. They rave about it. So
So did they buy it?
I went in once. I saw they had men's makeup, Roy. In case you're interested.
well, you should check me out next time.
Macy's is should look at because I think they're very much undervalued right now.
Macy's.
I think they have like a P of 5 or something.
Oh yeah, Macy's
Well,
is really.
Macy's is different. Macy's
There's a
makeup
reason why.
yeah.
Yeah.
Nobody shops at Macy's anymore.
Yeah. Yeah.
Okay,
Macy's
okay, so
cosmetic different.
so let me do a quick pass here on Lamb. This is I started out when I did this report, I was recommending a hold, and I'm getting just more and more like a thing I might want to sell this. They are they're selling. It looks like they're here at a 52-week high. You can see that, and if you look at the quarterly data, I mean, it's just it's bad. They've been sales and earnings have gone down. Now the story behind this, this is a cyclical stock, and I've never really traded in cyclicals. The price was down, and we got it for a really attractive price. And then they said that the whole market demand was going to for this equipment for these memory chips was going to shrink, like in the around mid to high teens. So the market opportunity is rather than in the $50 billion range, it's going to be in the $40 billion range. So everybody expected the sales to go down, and they did, but the stock market seems to be happy with it. And I don't know that memory prices are still cheap supposedly. The companies like Samsung are supposedly not making much money on their memory chips, and so they aren't buying equipment. So, I don't know when there's going to be a turnaround. The company only gives guidance out by a quarter, quarter per quarter. So, they give, next year guidance, but, it's, about like this year, it's way down from what it has been. I was projecting here around 9% on sales and earnings, which is what, look at my notes here, that's, this Morningstar is 6, Yahoo is 0.6, Zacks and Argus is 12, value line is, that should say earnings for value line there, so there's kind of a disparity there. So I don't know. I'm thinking that, maybe I'm on my projections, I'm pretty maybe way too optimistic. I think maybe this 5% might be more reasonable. And, at this, it's, even with, those higher growth rates, and I put, what I think was, I just went with the historical PEs of 18, and I dropped that down to 10. We're pretty far down in the hold range. So, I'm just, I'm not so confident in my hold, but I don't have a replacement at the ready.
I imagine this one's been affected by the Chinese trade war.
Well, I don't know that it has really. They've been, I haven't heard that. China is buying quite a bit of stuff from them. I don't know that. That it will.
I think some of it. Sorry.
Yeah, I didn't see anything. I listened to, or didn't listen. I read through the earnings call, and I didn't really see a lot of concern about that. This is if you look at this chart here, it shows what their percentage revenue is, and Korea has come down from 35 to 23%, and China has gone from 16 to 22%. But China is trying to become more independent and build up its own semiconductor manufacturing industry. So I think the market opportunity is growing in China, but I have to say I don't know about the tariffs. And they've, the earnings have been juiced here. They've purchased 15% of their shares back over the last year and a half. Oh, so here's what sales in China are increasing, and they've described the trade situation as uncertain, which I guess, it seems to vary morning to afternoon.
That seems mild.
Okay, hour by hour. But and memory equipment sales are down, but foundry equipment sales are up a little bit. They're expecting more 5G chips. Your processors. Probably that market is going to increase some. But yeah, the addressable market is down mid to high teens from last year. So I guess I'll stick with my hold, but the more I'm looking at it, you see when debt is up, and then next year's guidance, I guess, is down 9%.
We could see how the next 3 months shake out.
Do you think the debt's up, Tom, because they bought back so many shares, though, since it's debt to capital?
It's certainly possible. I mean, they have good cash flow. They're a very profitable company. I didn't investigate that, but you know, it could be, it's probably that. Plus also, you know, with interest rates being low, companies, you know, if you can get money cheaply, you know, you can do these high-powered financial analysis, and it shows that, you know, it pays to carry some debt.
Yeah, so a little bit. So say, Tom, I want to mention on Biogen, I don't know if this is true or not, but I've heard that there's some strains of cannabis that do attack the amalgam in the brain.
Amyloid.
Yeah, yeah. And they
Amyloid,
might.
I have not heard that. I guess cannabis is the miracle drug. It can just do anything.
Yeah, well, almost.
Well, I think we should try it anyways. It doesn't hurt.
Maybe we can send out.
Sounds like you're speaking from experience.
Maybe Bernard can send us all some samples or something.
Yeah, with the annual report, just like Fizz.
So I guess that's my sort of less than I don't know the right word, high level report here on both of these. It's just kind of a broad brush. So do you guys have any questions about these?
So Tom, just to reiterate, you're pitching Ulta as a replacement for BIB?
Yes, and I know they're totally different industries.
Yeah. That's fine. And then a hold on LAMP?
Yes.
Okay.
Tom, do you know in terms of Ulta, like how many stores they're planning on opening? What's the same store sales been like?
Well, same store sales are up, but sales are not as good as they were. They're planning on opening 80 stores this year. They have about 1,000 stores, and supposedly the stores cost a couple million to open, and they can supposedly pay them off within 2 years, and they generate all this cash. They have no debt. They do, open 80 stores a year with no debt. That's from funds from operations.
Wow. Okay. So that's about, like, if you assume that the sales are the same as all the others, that's like an 8% increase in their sales by opening these 80 stores, roughly. Out of 1,000.
Yeah.
More or less.
Are they considered cyclical or no?
Well, I guess it's whether you would call, I guess to an extent, makeup would be, but also, it might be considered like, like a small treat too, I mean, like, in tougher times, people might buy makeup and beer, so,
Yeah, it's almost as if seems like.
No, but these small things that people buy, it isn't like buying new cars or something. So I would think that demand is relatively steady, but it is supposedly like with the there's kind of like product cycles, like there were a lot of new introductions of products plus things I didn't really understand, new types of things like, these lip liners and sculpting and all these things, eyebrow shaping, things that were sort of new innovations that they sold a lot of products for, and now that those innovations have sort of tailed off.
Okay. If there are no other discussions, does anyone want to make a motion to buy or sell?
Well, I move we sell Fizz.
Seems like a lot of indecision tonight.
Yeah.
I move we sell all of Fizz.
I second.
Okay. So how are we voting? My iClub?
I think Roy was, yeah.
Yeah, I'm setting it up now. So this will be voting. Come on.
So we just have to log on to our own My iClub. Is that how that works?
You'll get an email, and then you can. I think there'll be a link in the email.
Now, do I still have the screen?
Yes.
Okay.
You can give to Henny.
Okay.
Oh, let me give to Henny. Can I
So
give
this
to
is
you?
what my iClub looks like, and then you click on voting, and it'll show
Oh, okay.
what's coming up.
Right. Okay, Jay. Before you give me.
We have a.
Okay.
Let's see. We have a. Who made the motion?
I did. Do we have a second?
Who is that? Tom.
Megumi seconded it.
Okay, Tom made the motion. Megumi
Yes.
seconded. Okay. There we go. So yes, so the motion will be to sell Fizz, yes, no, or abstain. So now let me save motion and notify members. Okay.
Yeah, I got it.
I got it.
So you should be able to access the voting and make your vote.
Okay.
Okay.
Can I make a motion to sell?
Wait a minute, let's finish this one.
Okay.
How do I, so you just vote? I mean,
When you click on the email, it'll take you into iClub.
yeah, and then I went to voting.
Right, and then it'll say yes, no, or abstain.
You
I
may need
can't
to
select,
you may need to refresh your screen.
okay, because it won't let me select any of those.
Select what?
Yes, no, it just, do I have to use a certain browser?
Oh, I
Do
don't
you
know.
have up at the top? Does it say Virtual Investment Club of Sacramento?
Yeah. But it's,
Well, mine worked. There were just like 3 little radio buttons. Just I clicked one.
Joanne, can we look at your screen?
sure.
Okay.
Voting's
I,
ended.
I never get an email on that.
Voting ended.
Yeah,
No,
it's
It's 7 minutes
past
before it
7.
ended.
Oh, not there. You look at the results.
But when I hit on voting, then
No, is that what you did? Current motion. Click a current. Oh, yep. That's
Well,
weird. I don't
Anyway,
know.
has the
So-
voting been closed?
Yes,
yes,
it has.
Yeah.
Yeah,
So
7 to 1.
7 to 1.
oh, wait a
Can I
minute though. I don't show that. What I show
go to
is
archive motions?
only 4 of us have voted.
No, go to archive motion.
Joanne, click it. Yeah.
I never. Oh, here
7
it is. I finally got an
showing
email.
7-1.
Okay,
Yes,
I got
yeah.
7
Okay.
yes, 1 no.
Okay.
Can I
Mine
make
just came. Mine just came. Yeah.
That's
Okay,
okay.
well,
Majority already voted. That's not really. Yeah.
okay.
Can I make a motion to sell
Yes, please.
to sell what?
Ozark?
I'll second.
Olive Ozark?
Okay.
Are we selling olive Ozark?
All right, let me
Yes.
set that up. So sell.
Henny,
Ozark.
all of Ozark?
Yes.
Hanny, and who seconded?
Tom.
So
Is that
do we
all?
delete the first email? Are we getting another one?
You're
You
getting
get
another.
another
You'll
one.
get another
Okay.
one. Get another
All right.
one.
Can I just stay in voting?
You might need to refresh.
I'm like,
Oh, here we go. Well, see here, I can't click on anything.
I can't do it.
Does anybody,
Uh,
can anybody see my
well,
screen?
Mine isn't showing anything yet.
Oh yeah, you're
I
right.
can't do
Don't
anything
click
either.
anything.
I
You
got the
are
emails, but
What
they don't
browser
work.
are you?
What
Did
browser?
You're right. You are right.
you send it out, Roy?
yes, I did.
I can't ever vote.
I'm using Chromium. I'm gonna get out of it.
Oh no, you can't use Chrome. That's no.
Okay.
Chromium. This is something
I'm
different.
using Chrome. Oh,
What do
okay.
you, I'm gonna
No,
use,
she's using something different.
I'll use
Well, you know,
Firefox.
Okay.
I did the same. I refreshed last time, and let me click on current motions. Oh, here's
So I
Okay.
want to let the guests know that we're trying this new voting system.
Okay, I found mine. I had to click on current motions.
Yeah.
Jay, we might, okay, if we can just can try to vote, but then if we maybe just to save time, can we open the microphone to the guests?
Sure.
Yes.
And we'll interrupt with,
Okay, there.
I would like to make another motion though, after this
yes.
one done. Oh, Joanne, you did it wrong. VixBI, that's not your username.
Yeah, it is.
Oh, it is? Okay, sorry. Yeah, okay. Because we all have our own. Never mind. I thought this generic login.
I did too.
Okay. So Roy, can we have another motion or are you done?
Can you take
Oh,
it
it's
off
a
my
sec.
screen? Can you take it off my
Okay.
screen? Because I
I
gotta
give
look
to
up my
Henny.
password. I gotta look up
Okay.
my password.
It hasn't closed yet.
Oh, okay.
But let's see. It says 8 have voted. So
So we have 11 of us. So majority is already voted.
Yeah, just yeah.
but let me see. That's the current one now. I've got to somehow close there. Maybe that did. 7 yes and 2 no. So it was 7-2 to sell Ozark.
Okay.
What's your motion, Jay?
What's your new one?
My motion is to sell Pac West.
Second.
Okay.
So we cleaning house?
That was
I want to
Jay.
vote.
We're cleaning house. Yes,
And
we are.
We're going for
Matt, that
cash.
was Matt, you seconded?
Matt seconded.
Yeah.
Okay.
Yeah, we're cleaning house.
You realize it's
Yeah, I
this is
think
going
we
to
just
have
don't
several
know enough.
thousands of dollars in cash.
I know,
Yeah.
we need to, yeah.
Do we have anything to buy then?
Ulta.
No.
We have
Oh,
Ulta.
Ulta.
Yeah.
Oh, Ulta.
Real estate. Real estate.
Ulta. I just hate not to look at the competitors. You know,
Buy real estate.
by real estate. Yeah.
Yeah.
I would like
REITs.
So
to
I
buy real estate.
got a
REITs.
problem. I never get a vote. I want to vote yes to sell Fizz, and I say no to vote to sell Ozark. OZK. I don't. But I never got the chance.
I know.
I-
Sorry. Bernard, does not really matter because the majority carry the vote says to sell Ozark.
Well,
So
you
even
need
if,
to-
yeah.
You need to click on current motions and keep refreshing till it comes up.
Yeah. Okay. What's the result?
I thought I was supposed to go to my email.
Yes,
But-
you did.
Well, but I don't
It
know.
doesn't
See,
work for me. It doesn't work.
Okay.
Yeah, it might depend on your browser, Bernard, like
I
mine.
use Chrome. I use Chrome.
Also, yeah. I see.
Can you check your spam box?
A
He
what?
said that
Yeah.
he got his email, but he
Oh,
just
he did get it.
he
Oh,
did
gotcha.
right
got e-
now, but
got
the
emails
motion's
about-
already closed. I mean, the vote is already closed.
Oh,
Ended.
okay.
The motion. Yeah, voting's already ended. I mean.
Try
Okay,
Firefox, Bernard. Try
7
Firefox.
yes and 0 no, 0 abstain.
Okay, I move we sell Biogen.
Well, yeah, do we want to challenge, replace it with Ulta?
Well, I do. I don't know about anybody else.
Is that the motion?
That's the motion. Yeah.
Replace
okay,
the
We
Biogen.
should separate them.
We
Separate
do.
them.
Oh, okay. I'll make that the motion if I can do that. Buy, sell Biogen, buy Ulta.
So Tom, you had a motion. Anybody second?
I second.
Hanny?
Yes.
It helps if people identify.
Sorry.
I have a question. I have a
What is the
question.
current- What's the
Okay,
new?
Henny.
Go ahead.
Do we
Go
want
ahead,
a discussion
Bernard.
before we vote?
Okay,
What's-
open discussion. My question is, who is Ulta's competitor?
Sephora, probably. Macy's.
Okay, Macy's not out of in the picture.
Yeah.
So Sephora is
What about
public
online? Is there
company?
any?
Amazon.
Amazon has some presence in the market. Supposedly, they don't have the share or the eyeballs that Ulta does, but they do sell cosmetics.
Yeah, but if you, that was brought up in my other club, and the feeling is the people who go to Ulta want to be to talk, to see
Oh,
the
yeah.
people and have it, try it out and be pampered in a way, where if you're just looking for, lipstick on sale, you could go to Amazon, but it doesn't give you any of the massaging techniques. So
According to CNBC, peers to Alta are Advanced Auto Carvana Company. Carvana, I've never heard of them.
Oh my goodness.
Tiffany,
Let's see.
Tiffany Tractor Supply, and William. So I'm not sure how they came up with
So
the.
retail basically was looking.
Yeah,
I
And,
think it's retail.
and
Yeah.
Sephora is owned by Louis Vuitton Moet Hennessy.
LVMH, yeah.
Yeah, LVMU.
Well, that's a
Right.
luxury. You're kind of getting in a
Yeah.
whole, that's a whole big company that sells these luxury goods, and so I don't know that market. I don't know how great the luxury good, them and Tiffany and
Yeah, no, it's
stuff
not
like
direct
that.
comparison.
So should we go ahead and send out the vote?
Yes.
Yeah, send it out. Yeah,
The
I've
reason
heard
why I'm
10.
asking that question, I just don't want to make other mistakes by doing. So we have two companies that we did not directly look at the
I want
competitors,
to
and
vote.
Is
just
World
curious.
Market a publicly traded company? World Market? Or is it Frontier One?
I don't.
They are, but they don't. Somebody else owns them. Somebody kind of surprising.
Hmm. I guess
World
that's who Alta reminds me of. They just have a whole bunch of different stuff from all over and
Yeah, but it isn't as junky.
Yeah.
true. Okay.
So
Is
is
this
it like
motion just
5?
to sell Biogen or to also buy Alta?
This is just a
With
sell
both.
Biogen. I'm the only one that shown has voted. Anybody else voted?
I haven't
Wait,
received.
I voted.
I haven't received an email.
Sorry, yeah, I got carried away. So let me refresh.
Oh, still didn't get it.
Oh, you can refresh your my
Just
iClub. You don't
refresh,
need to
yeah.
look the emails. You just
Mandy,
refresh
John,
my
and
iClub.
Oh,
Yeah.
I'm not getting. I click on this My Club and it don't take me there. I don't.
Bernard, try using Firefox, not Chrome.
Chrome is
so
fine. I'm using Chrome.
it's only to sell, right? Okay.
Sell
How
BA.
about if I just tell you?
Yeah, just tell us.
I vote no on this. I got 3 unread. I guess I had 3 or 4. Oh my God. I had a whole bunch of emails come in.
No, you got it. Yeah.
Okay, Joanne.
HCO.
Yes.
Joanne.
Yes.
Bed Bath and Beyond owns World Market.
Oh, okay.
Oh.
Huh.
That's interesting.
Okay. So I think the motion is passed. To
Yeah, let me see here.
so yeah, 7 to 0.
Yeah, 7 with 1 abstain. 7-0 and 1.
Right.
Yeah, I abstain. I can never. The damn things don't work for me. I don't know. I guess maybe next time I have to try Firefox, but
Yeah.
Bernard, I used Chrome, and last time it didn't work for me, and I got all of my emails after the meeting was over. But it's working for me now.
Chrome?
And I'm
But
using Firefox.
it would be better if you used Firefox. Chrome
Okay.
sometimes has problems.
Are there any other motions before we open it up? I'd like.
So,
What
I'm
about
still looking at
Alta?
Alta. Alta is specialty
Alta.
retail, like a 5.
No, I thought that motion was
It was a dual motion.
sell Biogen, buy Alta.
No.
Yeah, but we
Whatever you
didn't
want to
have
call it.
it was just
No,
a sell.
It was just a sell.
Oh, okay.
To buy would be a separate one.
Oh, I'm sorry. I thought you guys gave me permission to do that.
I thought so
Okay.
too.
Yeah, I thought too. That's what I heard too.
But we need to say what dollar amount when we do a buy.
Okay.
Well, it's 1,000.
Well, we've
You
got
can
a
do
lot
that.
of
Default,
money.
you can ask for more, right?
You want to
Since
go?
we have money.
I say we go 2,000. We got lots of money.
So
Okay,
is that
so the motion is to buy 2,000 of Ulta Beauty. Tom, is there a second?
No, nobody?
Died on the vine.
How come the sales and profits were going down on Ultra? I don't understand how we're buying it.
We're not. There's no second yet, Bernard.
Well, okay, I'll drop down to 1,000.
Okay, 1,000.
Well, why
Going
don't
once.
I
Going
think
twice.
I'm on the stock study committee next month. I will do an in-depth research, including competitors, and make a presentation next month.
Okay.
And then we can buy 2 or 3.
Okay.
Okay.
So what did we sell? We sold Ozark, we sold PAC W, we sold Biogen, right?
And Fizz.
And Fizz. Is there
Wow.
anybody that does not have any stocks?
I
this
don't
point?
right now.
Okay, I
Because
have
I sold Pac West.
I have Disney.
Don't give me real estate.
You don't want real estate?
Can I make a suggestion, please? Because
Yes.
it's getting kind of late.
Okay.
We can have that conversation via email,
Sure.
and maybe we can just open, and we'll do that by email.
Okay, sounds good.
Go.
Okay.
So, Jay, do you want to? And also, we need an education topic for next week, or next month, but we can do that by email as well. So, if you want to open it up to the guests, Jay.
Okay. You can go ahead. I go with Brian. You can go ahead, Hanny, to facilitate.
Okay, I don't see the.
You
Okay,
don't see it?
Brian.
Oh, yeah.
Brian Koenig.
Yes. Oh,
I
he has.
another good lesson. However, I think that you at the beginning, and you said that you didn't have any education tonight. I think that all the work that was done about the bank presentation should count as education for tonight. It was very informative.
That's a good point. Yeah, that's a very good point.
That's all I have. Thank you.
Okay, thank you very much for attending. Isla Barnes. Any comments or feedback? Isla?
Isla. Oh, she's our regular attendees. She just maybe she doesn't have a microphone. I think I do not have a mic, but
Yeah, she
stimulating
says.
conversation. Learn a lot about banks. She said.
But stimulating conversation. Okay, all right, thank you.
Thank you.
Anything else, Isla, before?
Yeah.
No. Okay.
Thank you, Ella.
All right, Mitch Tarr.
Hello.
Hi, Mitch.
How you doing? I volunteered to start taking part with your club as Roy moves on to bigger and better things. I'm a director on the Sacramento board here. So this is kind of my first call in and enjoyed it. I thought they did a great job on the banks. And I mean, I learned something. The other thing I would add really quickly is Alta's, we own that in the Model Club. Their differentiator is that they provide salon services. And that's something you can't get from Amazon. It's something you don't get from Macy's. And I think that was one of the biggest differentiators that was brought up in our club when we decided to buy it. Other than that, I look forward to continuing with the club.
Okay.
Great,
Mitch, I want
thank
to
you very
hear.
much.
I want to make sure I hear you. You said the differentiator is the salon services.
Correct. You can get your hair done there. You can get makeovers there, things like that that you don't get at normal.
Oh, and I think another differentiator is that you can only buy certain products through a salon, so that you can actually buy those products because they have a salon in store.
Yeah.
That was one of
Does that mean we want to revisit the vote?
Roy's gonna do. I think I heard Roy say he was gonna do an in-depth analysis on that for next week.
Yeah, I was being facetious. Yeah.
Do you know who? Okay.
Okay, Susan McNeely.
And Hanny, I'll send you pictures of my makeover.
Thanks, Roy. Susan?
Nothing to contribute. I'm a director on the Sacramento chapter and just came to listen.
Okay, great. Well, do you have any feedback for us or suggestions?
Not tonight.
Okay, thank you very much. All right, so that concludes our meeting. We'll stop the recording, and just two action items. I think we'll